It's Tuesday the 20th, Davos, day 2. Good morning, everybody. Welcome to the show. On the agenda, Takaichi gets the trust treatments. We've got ongoing Arctic angst and a potential Supreme Court ruling on tariffs today. Tom.
US markets will reopen today, of course, set for a bruising session. Down 1.3% is what S&P futures are pointing to. European stocks, after losses of more than 1% yesterday, pointing to further downside today. 20 points, down 0.3%. But here is where that focus is then, with the bond vigilantes out in force in Japan, selling at the long end, the 30-year falling 24 basis points as the move higher as prices drop when it comes to the long end of Japanese sovereign debt on question marks about the Prime Minister's tax cut plans. The countdown to opening trade starts right now.
NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
That was President Trump speaking 2 hours ago. He was in Florida. He's still busy on social media talking about Greenland, talking about the agenda. And he's not wrong. It is going to be a really very interesting Davos this week. He will be in attendance, of course. But that was 2 hours ago. A lot has happened in 2 hours, in particular with regard to Japanese assets, Tom.
And the selling pressure, as we've mentioned, at the long end, 27 basis points higher right now on the 40-year. Yields above 4% for the first time on record for that tenure. And this comes down to the Prime Minister outlining plans for a 2-year tax cut.
Yep.
On food to try to get consumers on board ahead of that February the 8th election. But the selling is there, and what you don't have is any connection between yields higher and stronger yen. The yen is down as the yields move higher. Global ramifications of the sell-off that we're starting to see, of course, reflected in Treasury markets.
I've seen this movie
as well.
before. Liz Truss starred in it last time. Is this a repeat?
And the Bank of England had to step in to deal with it.
So are we going to see Japanese rate hikes? What happens here? How does this play out? How does this ripple into global bond markets? Are we going to see a big reaction this morning in European government bonds? We're already seeing US Treasuries breaking out of their recent ranges. This is going to set the agenda today. Donald Trump thinks it's going to be about Davos. I suspect the story is coming out of Tokyo.
Well, it's really interesting, isn't it, the way that Treasuries and other bond markets have been responding to this, because we are seeing yields go higher, Tom. To your point, we've got 30-year Treasuries, 6 basis points higher. Same at the 20-year. 10 years are up by nearly 5 basis points right now. And if you were looking to reasons to be nervous and get into bonds, you'd find that in Greenland. But that's not what markets are thinking.
Yep.
Markets are much more concerned about fiscal sustainability. At the moment, that's in Japan. But they can draw links quite quickly between worries in Japan and worries in the United States.
Normally with Greenland, you'd buy Treasuries, as you say. You'd buy the dollar, but you're not. Like, this is the extraordinary thing about what is happening here. Is this a sea change in terms of the way that bond markets are viewing safe haven assets? And what are the implications of that? Gold is benefiting from this move that we're seeing out in Tokyo.
Yeah.
That seems like the gold market is the new treasury market. What does that mean in terms of how high yields could go? If we do see yields continuing to rise in the United States, what do the authorities there do about that? If we head towards 5%, what do global equity markets do with that and other assets? This is extraordinary.
And we're just ahead of a BOJ meeting, of course, as well. That's coming up on Friday. How will the BOJ respond there? They're not expected to move, but there'll be a lot of focus on whether Governor Ueda is going to be at all hawkish to try and stem the flow out of the yen. That seems to be an area of focus.
Citibank putting out a note saying there's likely to be 3 hikes if you cross 160 on dollar yen, which is currently 158 in 2026. Rates are currently at 0.75%. Inflation is 2.9%, close to 3% in Japan. So it looks to some like the BOJ is behind the curve.
Do you get repatriation? Basically, you've been using Japan as a piggy bank for a long, long time now. Its savings have funded global liquidity. If that changes, how do you reorder? What does the portfolio look? How different does the portfolio look?
Let's talk about the other area of focus for markets, because Greenland is still very much on our agenda. We saw heavy selling on European stocks on the back of this. US futures still pointing lower, and that is the Greenland story. That is the trade tensions across the Atlantic that the US has yet to price in. So President Trump was speaking in Florida a couple of hours ago. He says he was reiterating we have to have Greenland. He doesn't care about the Nobel Peace Prize, he says. He doesn't think, this is crucial, that Europe will push back too much and he will have meetings in Davos to talk about Greenland. Well, the Danes aren't going, so we'll see who he's going to be talking to about that particular subject. Back to stocks. Yes, it was a weekday yesterday, but Citi's still taking the opportunity to downgrade European stocks. And the thing is, they've outperformed the US this year to date. So there's a vulnerability perhaps priced in.
Do I need to price Diego Garcia into the gilt market this morning? Trump is raising that as a risk now for the UK, I would argue.
He's using it as an example of where he doesn't trust others to hold on to territory that he thinks is important.
So is he going to push the UK to change that strategy? Can he change that strategy? What is going to happen next? Is this... he's using tariffs as a weapon. This is kind of Clausewitz overlay in terms of how he thinks about changing geopolitical stories with tariffs. Is the UK exposed to that this morning, or am I reaching too far with that? I don't know, but the gilt market's going to be open.
It had already been a tortuous negotiation between the US and the UK, and they has seemed to have gotten to an agreement last year, but that now is back on the table, it seems. And to your point around tariffs, President Trump threatening 200% tariffs on the champagne and wine of France after Macron said he would not be joining the Board of Peace when it comes to Gaza. So tariffs are back on the agenda. It's leverage he's reaching for, but the question is, for how long, given the Supreme Court?
Yes, I do think he is using it as an example, as part of his Greenland argument, isn't he? So I wonder if he's trying to focus back on Greenland, but at the same time distracting us with all kinds of other news flow. Shall we talk about the Supreme Court?
Do we have to?
Really hesitant to do this because I'm not friends with the Supreme Court anymore. We've had 2 days of building up our coverage toward a decision, not getting a decision, and of course they didn't promise one, so it's not their fault, that's mine. But we are still anticipating, to some degree, that we will get some kind of decision on the IEEPA tariffs. And this ties back into Greenland, because if Trump wants to put tariffs on very quickly, is he going to fall back on these IEEPA powers, which are the subject of discussion at the Supreme Court?
I have nothing further to say.
Bloomberg Intelligence says there's a 60% chance the Supreme Court rules against those IEEPA tariffs. $150 billion of revenue would then, in theory, have to go back. The betting markets, Polymarket and others, are betting that there's a 22 to 25% chance that the Trump administration wins. So, and around an 80%, 75% chance that they lose. So they think it's higher odds that...
But as we've discussed before, there's lots of nuance here.
There is the nuance.
What happens with the existing tariff revenue that's already been raised? There's all kinds of ifs and buts that are around this. It's not a simple coin toss, which 60% would seem to imply. But I don't know. I don't even know we're going to get a ruling today.
Well, and even if we do get a ruling, which might be today or tomorrow, might be when President Trump's at Davos, it should be interesting. If we did get a ruling this week, they might say nothing on the refund question. They might leave that to some lower courts, as informed by Brendan Murray yesterday.
Is he more cross when he shows up if he's had a ruling against him? Is it going to change? Does it change the tone in terms of his approach to things?
How binary is that speech by President Trump in terms of the market reaction? Is there a de-escalation as these leaders seek to meet with him and try to find a diplomatic solution? Or does he just double down on the kind of comments that we've heard from him today when it comes to Greenland?
Let's tell you about some of the guest conversations coming up in this programme from here in London, and of course we're live in Davos as well. So Jordan Rochester will be with us, Mizuho FIC strategy head. Great voice to have on the programme as we are focused. Part of our brains, part of our radar is focused on what is going on in Japan. Maria Bateman will be with us, State Street Global Markets, head of equity research. We saw tech really under pressure yesterday, actually, as a result of broad equity selling here in Europe. So how does that fit into her long tech views? From Davos, we'll be hearing from the Google DeepMind COO. Lila Ibrahim will be with the programme. And Fabrizio Boisi, the Prosus and Naspers Group CEO. So keeping the focus very much on tech. Part of that conversation, at least, coming up from Davos.
There's plenty of great conversations coming out of Davos today. We're potentially going to get some news flow in the next few minutes. But, Kenna, here's what's on the agenda for Bloomberg. The Finnish president, Alexander Stubb's, going to be joining us. Greenland, NATO, what happens on the northern flank of NATO, all of that in focus. Bank of France governor is going to be joining us a little bit later on. Sergio Motti's going to be joining us a little bit later on. He, of course, is the CEO of UBS. And the UK Chancellor, Rachel Reeves, joining the team a little later on the day. That is going to be an interesting conversation.
Did you see the Financial Times reporting that the Chancellor has asked the CEOs and executives of UK companies to go to Davos and try and sell the UK as a place of stability compared to the US? I thought that was interesting.
And compared with Japan. The trust hangover is still it's still part of the narrative when it comes to the UK.
Oh, well, that too, yeah.
We'll see to what extent the UK can profit from that instability elsewhere. Here's what else to think about then in terms of the daybook. ECOFIN meeting is happening in Brussels. We'll monitor that for you. 9:25 a.m. UK time. This is interesting as well. The US House Speaker, Mike Johnson, will be addressing the UK Parliament at 9:25. And the UK deadline to approve that controversial Chinese embassy, that deadline is today. Reports suggesting that the UK government is going to be approving it. We will see if that is confirmed later.
Yeah.
Also, Supreme Court hearings, of course, we talked about this. Tariffs. Lisa Cook, interesting that Jay Powell will be attending the hearings on Wednesday as well for Lisa Cook, as he kind of leans in to having a backbone when it comes to President Trump, unlike some, arguably. Also, looking at sales from Rio Tinto and Netflix earnings.
This is an extraordinary week in terms of the news flow that we're going to be seeing. Keir Starmer, if he approves the Chinese embassy in London today, how do you think a certain person on the other side of the Atlantic is going to be responding to that? Don't know. It could be a tough day. Diego Garcia and a Chinese embassy story for Keir Starmer to deal with today.
Maybe President Trump will have plenty of other things to be messaging about.
Sure he will,
we'll see.
but he can do...
That's what you hope, maybe, isn't it? You play for time. Keep your head down.
He might be on an aeroplane. Who knows? What else do you need to know this Tuesday morning? The French Premier, Sébastien Lecornu, is to use Article 49.3 to adopt the 2026 French budget. He's going to do so, therefore, without a parliamentary vote. The move comes after months of talks with opposition parties failed to yield an agreement. Lecornu will likely face a no-confidence motion. Socialist lawmakers have indicated they're ready to allow the government to remain in place after he made concessions on tax and spending measures. Croatia's central bank chief, Boris Vujcic, is set to become the next European Central Bank vice president and the first person from Eastern Europe to join the institution's executive board. Vujcic secured the backing of the Euro region finance ministers to succeed Luis de Guindos. He will face a hearing at the European Parliament before the European Union leaders have the final say on his appointment.
The Eurogroup also agreed today to endorse Boris Vujcic, governor of the Croatian National Bank, for the forthcoming ECB vice president vacancy. I am pleased to report that we had an agreement on both the process and the person.
And Donald Trump's proposed Gaza Board of Peace faces a series of key tests this week, following criticism from Israel and questioning from Europe. Bloomberg understands the US president wants the full constitution and remit of the committee signed in Davos Thursday. France's Emmanuel Macron has declined an invitation to join the board. An invitation was also extended to strongmen such as Belarus's autocratic leader, Alexander Lukashenko. An interesting board, interesting meeting that would be, wouldn't it, with all those various parties?
Well, it's fascinating. It's Board of Peace and what it is and is not. Is it replaced the United Nations? Well, President Macron has said he's not joining. President Trump is angry. We played some of the clip earlier of what he said 2 hours ago in Florida. He also threatened 200% tariffs on French champagne if Emmanuel Macron does not join. So we'll watch companies like LVMH and others when it comes to that trade.
Mark Carney says he's going to join so that he can try and influence it from the inside. The Russian leader, Vladimir Putin, has apparently been invited to the Board of Peace. The Board of Peace for Vladimir Putin.
We live in it. Like
a European official
times.
saying, no doubt he will be thrilled to accept, but we haven't actually heard from the Kremlin yet. Let me mention also that President Trump has been busy posting messages from world leaders, and we have confirmation from the French that this was indeed real, a message from Emmanuel Macron to President Trump. And it was really interesting. It gave you an insight into how diplomacy with President Trump is done these days. It had a couple of lines in there where Macron was emphasising things they agree on, whether that's Iran or on Syria, and then perhaps speaking for many European leaders, he said, I do not understand what you are doing in Greenland.
Yeah, I think a lot of people may be sharing that view. Yeah. But the question is, do you have to understand or do you have to manage it? You may not understand it, but you've got to deal with it. And this is going to be a big feature of the landscape when it comes to what is happening in Davos over the next few days. The tariff threat is real. Countries are being exposed to this. The tariff threat is likely to go higher. Maybe the Supreme Court changes the trajectory on that. I don't know. But this is just the reality. He's talking in the post that he's delivering this morning. This is strength. This is the diplomacy of strength. And Europe is perceived as not having that strength, and therefore, essentially, it's going to have to roll over. Mark Champion's got a really interesting piece on this, basically saying Europe is going to have to accept what is happening here. He doesn't have... other things are too important.
Yeah, when you saw Keir Starmer saying we rely on US intelligence in ways and for reasons that I cannot tell you.
Our nuclear deterrent is launched by US missiles. We may build the warheads, but they build the missiles. There's so many things that we are interconnected with. And a complete divergence feels completely unrealistic.
To your point, the big risk when it comes to what European leaders will be watching for on the geopolitical front, beyond tariffs, is anything that he says about Ukraine and supporting Ukraine with that intelligence that the US provides.
But how do you price this? This is the thing. I don't know how you put this. This is a question I think for all of our guests today. How do you fold this in and put this into? How do you assess the risk around all of this and put a number on it?
In such an uncertain world. Coming up on the programme, we'll be continuing our live coverage from Davos, of course, today. You're seeing live images of a Bloomberg House panel from the World Economic Forum with former US Vice President Al Gore and Bloomberg's David Rubenstein. Terminal users can follow this event and others on Live Go. Plus, Citi downgrades European stocks for the first time in a year, citing friction between Brussels and Washington. There's plenty of that to talk about. Up next, the slump in Japanese bonds deepens. We will talk investor reaction to the Prime Minister's election pitch and what it means for the fiscal sustainability story in Japan and elsewhere. If you have questions, if you want to get in touch, IB plus BBTV Go. That is the function, with a combination of functions to use on your Bloomberg terminal. This morning and every morning, live from London and from Davos, this is Bloomberg.
To the people in Japan, as the Prime Minister, today I have decided to dissolve the House of Representatives on 23rd January. After dissolving the House of Representatives on 23rd January, the campaigning will start on 27th January, followed by the general election, which will be held on February 8th. I plan to hold the election immediately as such. I, myself, am staking my career as Prime Minister.
The Japanese Prime Minister, Sanae Takaichi, announcing plans to hold a snap election next month. The tax cut story is really kind of what is enlivening markets, though, this morning. She wants to cut taxes aggressively. I feel like I've seen this movie before. We're seeing a big sell-off in Japanese bonds as a result of this. Is the BOJ going to have to react? Do I need a lettuce? These are the key questions that I think I'm asking myself this morning. Let's try and find out what Jordan Rochester thinks about all of this. Head of Fixed Strategy at Mizuho EMEA. Good morning.
Good morning.
Do I need a lettuce?
No, you don't need a lettuce. In fact, she's extremely popular.
Yep.
That's kind of why the market's reacting the way it is. She's got some of the highest approval ratings. This is going back to Arbenomics. So the market's pricing in a potential majority and a potential strong majority, giving Takaichi to go back to the policy positions that she had a year ago before she softened her views on fiscal spending and monetary policy. That's what got her into the leadership, becoming a bit more sort of balanced with the rest of her party. But the market's fearing the idea of fiscal spending, but also leaning on the Bank of Japan to not raise interest rates.
Is the Bank of Japan going to hear but not listen? Is the Bank of Japan going to do what she hopes? Is the Bank of Japan going to be forced to raise rates? We're starting to see a little bit of a repricing here. The Bank of
Japan's independent, but the market is aware that politics does play a factor into their decisions in terms of timing around elections. So that was the main concern for timing the BOJ. Now what the market's doing is it's saying that the Bank of Japan could raise rates twice or three times this year. That's kind of where commentary is going. I saw some notes from Citi, for example, pushing that way. Is April a live meeting? For us, it's possible, but it's now a little bit over-egged. I think that it's still the case that the BOJ will want to raise rates every 6 months because they follow the data. Now, whilst the fiscal is a stimulative sort of move, she's cutting taxes. And what that will actually mean is that inflation will mechanically come down quite sharply. Consumption tax cut on food takes off around 1.5% from Japanese inflation. She's also got government gasoline taxes that they scrapped in the budget that they're trying to get through as well. We could see CPI in Japan in single digits. Most central banks wouldn't be doing a rate hike when that's the case. But they will try to look through that because that is government-forced moves in the CPI. They will try and look at underlying inflation. The labour market is very tight in Japan, which keeps us on course for saying we should have a sort of every 6 months a rate hike. But the other factor is dollar-yen. right now dollar yen has been flirting with the sort of FX intervention levels of 2024, which is between 158 and 162. The finance minister Katayama and Mamura-san, the FX chief of the Ministry of Finance, have both given probably the strongest FX verbal intervention they can. We've got a sort of rankings. It's at the top level before they actually usually intervene.
Okay, and when they intervene, sometimes they do it on days where the US is closed. So we were poised to see, because there's less volume in the market, you don't have to spend quite so much of your pot, I suppose, to support the currency. There wasn't particularly any evidence of that yesterday, was there? So do we still have this expectation then this week, perhaps, that we see intervention from the Ministry of Finance?
It's anyone's call. It's only their decision, really. It's a human decision at the end of the day. It's when we get to sort of 162 in dollar yen, then I'd start to say, hang on, this is now very live as a risk. But the market is currently toying with all of these moves from the BOJ is what we're seeing as large selling from domestics in terms of the way the JGB's moved over the past 24 hours is what I guess is going on. Dollar yen's heading higher. So it's this situation we've seen in the UK before, lower foreign exchange and sort of higher JGB yields. In the UK's case, it was gilts. When it comes to the sort of FX intervention, you usually get massive moves when they come in. So is it really worth being long dollar yen? Because if they do come in, you're going to have a 3 to 5% drawdown the day they do intervene. So for a lot of investors, they're pulling back and staying very light in their dollar yen exposure.
Mindful of the possibility of intervention. Looking at the bond markets then, looking at the 40-year up by 28 basis points, Jordan, is this the kind of situation where you need some kind of circuit breaker, where you need action, where you need something to happen, somebody to come in and do something? In the UK case, it was the Bank of England, but that was very much to do with some dynamics around the pension industry. Does something need to happen here, or does this just settle down by itself?
Well, let's go through what's going on. The majority of JGBs are held domestically, but what's changed in the past 5 years is that the majority of the volumes traded every day are from foreigners. It's now over 50 to 60%, depending on which part of the curve. So you're seeing much more volatility in JGBs than we've seen in most of our careers. Now, they have stepped in before they've either changed rim-ban auction sizes or the Ministry of Finance has tried to change the size of the issuance in the long end, which is what they've been doing. They have been trying to reduce their 20-year, 30-year and longer and issue more in the 10-year and below. I suspect we'll see more of that.
To be clear, so foreigners own what, 7% or something?
A bit higher. I think it's closer to 11.
11%. And so the volume moves on to some extent. You can strip some of that out because the volume is coming from that 11%. Is that right? I mean, how much we read into the...
So a lot of those JGBs are held by the Bank of Japan themselves.
Yes.
The other part is insurance and pension funds who buy to hold.
Yeah.
So they're not in and out on a daily basis.
Is there a financial risk? I mean, Anna brought up the pension crisis that we almost faced here in the UK because of those commitments to long-term gilts. Is there a similar potential crisis brewing for insurers and banks and the liabilities they have exposed?
I don't think so, because you had the LDI market with all the leverage in the UK and they were trying their best to get out the door at the same time.
Okay.
That's kind of why you had the crisis in the UK.
What level of yield are you looking for to see that repatriation of funds back to Japan?
It's a big question.
On the 10-year, is it below that?
So we're having loads of foreign interest in JGBs right now, hence the volumes have picked up, because when you FX hedge it, you get close to 6% to 6.5% on the 30-year JGB as a dollar-based investor.
That's why. Attractive.
So you're getting record foreign inflows. But you're actually getting net selling by domestics because they're waiting for the uncertainty around the BOJ rate hiking cycle to come to an end. So in answer to your question, the flows will come back from the domestics when things calm down, and things are not calming down.
OK. Jordan Rochester, fantastic voice on a day like today with the selling pressure coming through at the long end of Japanese bonds. Of course, head of FICC, of fixed strategy at Mizuho EMEA. Let's quickly bring you some pictures and sounds of the US Treasury Secretary, Scott Bessent, of course, at the USA House in Davos. Let's listen in.
Michigan last week, and that was borne out there. Here in Davos, amid ongoing uncertainty for other countries, market participants are increasingly seeking out jurisdiction that offers stability, clarity, and scale. The United States continues to lead across all three dimensions, which is why the rest of the world wants to grow with us and invest with us. And we welcome them with open arms. Taken together, President Trump's policies have delivered a historic economic comeback for both Wall Street and Main Street in record time. For too long, Wall Street has been
Welcome back. This is the opening trade, 7:30 here in London, Tuesday the 20th of January. We're live from London. We're also live from Davos. There's plenty of activity taking place there. Let's have a moment to check out what we're expecting from the European equity session ahead. Futures are pointing lower once again. That in itself is an interesting story. Yesterday we saw heavy selling attached to the tensions around trade across the Atlantic. We may get another day of that. We'll certainly focus on some of the luxury goods in Paris with that in mind. CAC 40 futures, Guy, down by just shy of 1%, actually. We'll watch champagne names, perhaps.
LVMH, big feature of that index. OK, let's talk about the bond market. This is where the action is this morning, folks. So the Japanese 10-year is up by 8.2 basis points. The US 10-year is up by 4.8 basis points, breaking out of its recent range. We now have European government bond markets open. Germany is up by 3.1 basis points. You've got Italy up 3.2. France is up 3, in line, despite what is happening in terms of the politics in France. So basically, in terms of order of magnitude, it's a big move in Japan, reasonably big move in the United States, quite a big move in Europe in terms of the bond market, but the bond market is the story.
Got to be wondering if the US Treasury Secretary Scott Bessent will be glancing at the Treasury markets as he attends Davos, given their focus on the 10-year stateside. We're going to listen in right now to the press briefing that the Treasury Secretary is giving at USA House in Davos. Let's listen in as he takes questions.
Expenditure, CapEx, if I don't know what my costs and fees and customs duties I'm going to face in the future.
Well, again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I am urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Back then, only one country, China, escalated. We ended up in an unfortunate tit for tat in tariff raises. We ended up at 145, 125. Through President Trump's good relations with Party Chair Xi, we have managed to stabilize that relationship and given great certainty. And as far as your question about the additional tariffs, what President Trump is threatening on Greenland is very different than the other trade deals. So I would urge all countries to stick with their trade deals. We have agreed on them, and it does provide great certainty.
Great, thank you. We'll take the next question, please. Let's start here in the front row with the laptop. Please state your name and outlet.
Tim Bartz from German magazine Der Spiegel. If it's true that your economic policies are so successful, why doesn't it resonate with the American people? Your president and the government is highly unpopular in your country. Are they not able to understand what you have achieved, or what's the reason for that?
Great question. I can tell you what we are not going to do. We are not going to do what the Biden administration did, and I believe the American people still have inflation PTSD from the biggest inflation in 49 years, and the Americans, they are right to be upset. The Biden administration created an affordability crisis like we have not seen. We are working to bring that down, and please recall that many outlets in this room said that it was a vibe session. The American people do not know what they are feeling. They don't know how good they have it. What I believe is that the policies will take root and that we are going to see a very, very strong economy this year. We could see 5%, between 4-5% real growth, which would mean 7 or 8% nominal growth. And to answer your question, you may not understand the nuances of the way the U.S. tax bill worked, but part of it is a timing problem. When we did the One Big Beautiful Bill on July 4th, which included the president's signature policies for working Americans, no tax on tip, no taxes on overtime, no taxes on Social Security, deductibility of auto loans. If you buy an American car, the IRS, which I am also the commissioner of, did not give withholding guidance. So Americans continued paying at the same rate. So in the first quarter, we are going to see substantial tax refunds, maybe up to $1,000 for working households, $1,000 per worker. So we will see these substantial tax refunds. Americans will adjust their withholding, and they will get an automatic bump up in their weekly or monthly paychecks. So I think that we are on the cusp of an acceleration that working Americans will feel.
Thank you. We'll take the next question. Let's please go right here, ma'am, with the name and outlet.
Christine Lee, most recently with Bitcoin Magazine. Can you give us an update this year in 2026, what America's strategy is for a Bitcoin strategic reserve? And given that the SDNY recently seized Bitcoin from developers working on a project called Tornado Cash, what does the administration think about that, contrary to Trump's executive order saying that Bitcoin should not be, seized Bitcoin should not be sold?
So a lot of things to unpack there. I'm not going to talk about Bitcoin specifically. What I will talk about is the administration led by Treasury and our colleagues on both sides of the aisle in Congress passed historic legislation, the Genius Act for stablecoins. We are working on clarity legislation. And our goal, again, it is the president bringing digital assets and innovation onshore to the U.S. We want to be the best regulatory regime for digital assets and creativity to spark innovations. The previous administration almost created an extinction event for digital asset companies. We are bringing them back. I'm not going to comment.
Scott Bessent there, the Treasury Secretary, of course, taking questions on growth in the United States, tariff policy, the market reaction to that, urging everybody to keep calm, to show some restraint, talking about CPI PTSD in the United States being the cause of perhaps everybody not feeling fabulous about where the US economy is right now, according to Scott Bessent. Now, sticking with Davos, tariff talk and Greenland are dominating the conversation. Bloomberg's Lisa Abramowitz is in conversation with the Canadian Minister of Foreign Affairs, Anita Anand. Let's listen in.
What did he mean by New World Order?
So if I could just take that question in two parts. The first is, what did we do with China? What occasioned the Prime Minister to make a statement like that? And first and foremost, we have begun a new era of relations with China. We struck a deal which reduces tariffs on canola and seafood products. And we made sure that we're on a track for a strategic partnership covering numerous areas, including clean and conventional energy, including trade and economic relations, including safety and security, and multilateralism. So the work that we are doing bilaterally and multilaterally with China is in a new era. At the same time, Prime Minister Carney was referring to the complete rewiring and volatility that is underpinning the trade relationships and the WTO among countries. And he was clear to say, as we believe, that we have not reached that new world order. It is not defined at this moment. We are in a process of volatility where we see a reordering of international relationships and a pragmatic approach to global conflict. We see that in terms of Ukraine with the coalition of the willing and security guarantees as a prime example.
So how much is this the rest of the world moving away from the United States?
This is, as I said, a pragmatic approach to international relationships, that it is one and the same time self-interested. That is why Canada is diversifying its trade relationships. We need to ensure that we bolster and grow the domestic economy. At the same time, we will not retreat from our multilateral relationships. Canada stands for certain values, the upholding of international law, the assurance that multilaterally we are cooperative and collaborative, and at the same time pursuing the ever important growth of the domestic economy in areas where Canada is a superpower, energy being the prime example.
The deal with China included reducing tariffs on electric vehicles coming into Canada from China, and China reducing tariffs on agricultural goods going to China from Canada. How far do you expect this alliance to go? Is there more to come with respect to tariffs being pared back, closer alliances commercially?
Well, as I said, this is a new era in Canada-China relations. And what that means is that there will be growth and advancement in the relationship as we continue to pursue the strategic partnership, the new strategic partnership, I should add, that Prime Minister Carney and President Xi agreed to just a few days ago. What that means is that you are going to see continued symbiosis across issues, especially in the economic area. But let me take it back to energy. Canada is an energy superpower in both clean and conventional energy. The first shipment of LNG left Canada's west coast of British Columbia just last summer. And everywhere I go, countries are asking, how can we have more of Canada?
So much of discussions here at Davos this year have been concerning Greenland. That was not my bingo card coming into this. I'm just wondering, from your perspective, how much that sucked the oxygen out of the room for issues like Ukraine, for other types of geopolitical discussions?
Well, I was the Minister of National Defence between 2021 and 2023 in Canada. And at that time, the Arctic, and indeed Arctic security and sovereignty, was very much on our radar, and it continues to be the case with the Russian illegal invasion of Ukraine, for example, and Russian infrastructure moving further and further north. We, as an Arctic country, 70% of our coastline is interfacing with the Arctic, 40% of our territory. We have no choice but to ensure that we are bolstering our Arctic presence. We are doubling our troop work and deployment nationally and internationally. We're going to make sure that we increase our defense spending to 5% of GDP, as NATO allies are doing. This is our promise. $80 billion was in our last budget for defense spending.
Are troops from NATO going to Greenland and going to Arctic regions in order to protect against possible incursions from China and from Russia or from the United States?
So the question of troops in Greenland seems to be so prevalent. Let me just say, NATO allies routinely do exercises, military exercises together. That's a fact. The point that I've been raising with Mark Rutte, the Secretary General of NATO, is historically NATO's gaze has been eastward, on the eastern flank. Canada's largest military operation is Operation Reassurance in Latvia, for example. But what I've been saying to Mark Rutte, including before the attention has been focused on Greenland, is that NATO is the North Atlantic Treaty Organization. NATO needs to have a northern and western focus. This is clear. It is one of the primary reasons that NATO was founded, in my view. Canada is a founding member of NATO, and we deeply encourage a greater focus on the Arctic. And finally, I'll say I'm headed to Greenland, a trip that was planned long before the past couple of weeks' events took place. I'll be going with my Danish and, of course, Greenlandic counterparts to open formally the Canadian consulate there during the first week of February.
Are we watching the NATO alliance collapse?
Not at all.
OK, we're going to leave that conversation that is happening currently at Bloomberg House and take you back over to USA House down the street in Davos to continue to catch up with what we are hearing from the US Treasury Secretary Scott Bessent. Speaking in the last couple of minutes, he's warning against hysteria, quote, over Greenland. He says European countries will continue to hold treasuries. That's been something that's been floating around, the possibility of European countries dumping treasuries. He is calling that a false narrative. Let's listen back in to the US Treasury Secretary.
But that does not mean that we cannot have disagreements on the future of Greenland.
Yeah, but if there's a protracted trade war between the U.S. and Europe,
but again,
what price are you prepared to
you
pay?
say if there's a protracted trade war, why are we jumping there? Why are you taking it to the worst case? Calm down the hysteria. Take a deep breath. This is where we were last year. I'm sure you would have asked me the same question if we were here on April 2nd. And you know what? It all worked out. The economies are fine. We have a very good trade agreement. And I think our relations have never been closer. If anyone in this room wants to go back and study history, has anyone done that? What what happened in post-World War II. It was not a straight line. Konrad Adenauer did not always agree with the U.S. presidents. Charles de Gaulle certainly did not agree with the U.S. positions, but that did not mean that we were not strong allies against the Soviet Union, did it?
That's
you want to answer that? Did it?
So what's your message to European business leaders then who are now hesitating about the financial relation they have with the U.S.?
That it's been 48 hours. As I said, sit back, relax. I am confident that the leaders will not escalate and that this will work out in a manner that ends up in a very good place for all, for national security, for the U.S., and for Europe. Thanks.
Thanks, everybody. That's going to be the last question for today. We have to restage this room. Thank you, Mr. Secretary.
Thanks.
What I will again remind you all, there is another press briefing. Everyone who is here today is invited tomorrow. I would project that during tomorrow's press briefing.
Okay. You have been listening in to the Treasury Secretary, Scott Bessent, the U.S. Treasury Secretary, briefing at Davos House, USA House in Davos, basically trying to downplay the message surrounding the recent tariff escalation delivered by President Trump. Sit back and relax.
Sit back and relax is his advice to European leaders. President Trump saying overnight that he is confident that Europe won't push this too far, and Scott Bessent saying that he is confident that this will not end up in escalation. I mean, we've talked many times about the realpolitik of security arrangements that mean maybe Europe is limited on the extent to which it can push back. But I think you got a sense of some of the anger in Europe just from some of the questions from the journalists. They were quite pointed in places, and I think that reflects the mood.
And the Treasury Secretary trying to parcel off Greenland as a separate issue that can be worked out, that should not be impacting that US-EU trade deal, saying this is a good deal. He expects it to remain. And he kept going back to April the 2nd, the huge sell-off, all the anxiety, and saying, look, it worked out, it's going to work out again.
But why did it work out? I mean, didn't they step back from the edge in the end?
Yes, and it was interesting that he referenced China as an example. If you push back on the US, then we will retaliate. Do not push back on the US. Well, of course, many people's interpretation was that China played a blinder in terms of putting rare earths on the table and actually got the US to back down. But nonetheless, he was using an example. Do not retaliate against the US. That was his warning to Europe.
They seem to want to position the Greenland trade just as a transaction.
Well, it's real estate. He said over the weekend, we need title. This is the language of real estate, isn't it? This is the way that maybe this administration views this conversation. It's certainly not the way it is viewed in Europe, and that's awkward.
It's quite hard to tease apart what we're seeing in terms of the market reaction to all of this morning. You've obviously got the Japanese situation that is evolving fairly quickly, a big move in the bond market there. Gold has moved on the back of that as well. Can I separate out what we are seeing vis-a-vis what is going on surrounding Greenland? The Supreme Court potentially a little bit later on. It's a day littered with risk events.
Yes, I mean, long end JGB yield going up on the Japanese story. The long end of the Treasury curve also elevated then. Yields up now 7 basis points at the 30-year end. Something on Scott Bessent's
Is the equity market the Greenland story and the bond market the Japan story? I mean, there are interlinkages as well.
And FX was very much a Greenland story yesterday, wasn't it? Although the Japan story getting in there as well now with the yen question.
It's really hard to deal with, and you get more and more commentary coming through from President Trump over the next 24, 48 hours. He's got this obviously big series of meetings in Davos. Who knows what are going to come out of that? It is personal. The interactions become very personal very quickly, as we're seeing with Emmanuel Macron. So what happens next? Let's try and get a sense of that and how it's likely to evolve over the next few hours. Bloomberg's chief Europe correspondent Oliver Crook joins us now. Ollie, what do you make of that? So how have things evolved in your mind this morning vis-a-vis Greenland and Europe's response? The Treasury Secretary, Scott Bessent, a couple of moments ago, saying Europe just needs to sit back and relax. Just watch this play out. Is that how Europe is treating it this morning? Is that how we should expect things to evolve?
I don't think necessarily that that's how things are going to evolve this time, Guy. I mean, I think that there were definitely some lessons learned in Europe from the first trade war last year. And I think, again, the sort of overarching theme here is that yesterday it was about the trade deficit. Today it's about Greenland. And tomorrow it can be about something else. So appeasement may not be the route forward for Europeans. There's some disagreement among European leaders about exactly how to proceed. It hasn't been really spilling out into the open, into the public yet. We know that Macron has spoken very sort of aggressively about the the anti-coercion instrument. That's something that Macron has really spoken about, really from the beginning and even in the trade war of last year, because the French are not quite as exposed to the American exports as, say, the Germans. So this is going to be a very lively debate for European leaders as they meet here in Brussels on Thursday evening. We should say that there might also be a G7 meeting we're hearing in Paris on Thursday afternoon. We got those text messages that President Trump from Emmanuel Macron has shared on Truth Social, saying that he's trying to arrange a possible meeting in Paris, that he doesn't understand what President Trump is doing on the issue of Greenland. Really, very interestingly, he says he's offering to set up a G7 meeting after Davos in Paris, that they would invite the Ukrainians, Danish, Syrians, and the Russians to on the margins of those conversations. So something, a sort of G8-ish meeting potentially from the French president that's being offered there, a sort of interesting tidbit, not something I imagine that the French president would have shared with the public. But again, I think that going back to your original question there, Guy, there are some things that have been learned. And again, we said that Scott Bessent here in this press conference, he just said that the Chinese were the only ones to push back. And I think in the minds of many, the Chinese were the only ones to really win in that dispute with the United States. So the Europeans are going to have to work very sort of carefully, very calculatedly. Again, Scott Bessent says that NATO is rock solid. That is going to be the main concern for Europeans pushing back. Will this infringe on the possible security guarantees and the commitment of the United States on issues of Ukrainian security?
Ollie, thank you very much. Bloomberg's chief Europe correspondent, Oliver Crook. We have been listening, of course, to Scott Bessent. Plenty of content in there. Let's think about where this leaves markets. Mark Cudmore joins us from our Markets Live blog, of course, our Markets Live executive editor. Mark, let me start with the European agenda because we're just ahead of the European Open. French futures are weaker. There could be a tariff perhaps on champagne, we hear, overnight. US stocks set to fall in Greenland, but of course they are playing catch-up. This is one area of negativity that markets are dealing with, but then, of course, you layer on top higher yields in Japan.
Yes, I think there are two very big risk-averse events happening at the moment. The obvious one is Greenland is going to be a really slow-motion train wreck. I think the problem is here, kind of as Ollie outlined there, is there's no incentive for either side to back down. There's no incentive for Trump to back down from the hard line, and there's no incentive for Europe to kind of concede any major ground until the populace in Europe starts squealing on the economic front, which probably won't happen to at least those 25% tariffs in June. So we're going to take a while to price this because we're not going to get more aggressive lines from Europe. We're going to try find a diplomatic solution, but it's hard to see where that compromise comes. So that's the slow motion risk aversion. And I understand why people aren't overreacting at the moment, given the track record over the past year of Trump always chickens out. But there's less incentive there this time. The other more immediate concern, and the one I'm really concerned about because it's definitely been underappreciated at the moment, is what's happening in the JGBs market. 30-year JGB yields are trading 40 basis points above where they were on Friday. They're about to close the yields are about to close the highs today, about 27 basis points higher on the session. Now, this is really important because it has global macro consequences that will come delayed. When will they come? They'll come when JGBs find a floor. Now, I'm not sure that's going to happen. We're still a couple of weeks away from the election, and this is, we've talked about for a long time that JGB yields should ultimately be much higher. The country's got a massive debt problem and are about to expand fiscally very aggressively. So it won't be a global problem until they find a floor, but that could be much higher. It'll be a domestic Japanese problem. But when they find a floor, Japanese investors own assets all over the world. If they have a chance to buy JGBs at, 40 basis points yields already over the last few days, but could be much higher yields, they're going to pull back money from around the rest of the world. That will blow up the carry trade as well. This is a large bond market, so the consequences here are massive and being underappreciated.
Just what happens next then? How does this? Just give me the implications for the Treasury market, the European government bond market, people's portfolios. Mark, when does this start? How seismic could this be?
I think this is very big, but I can't work out the timeline. Several people have asked me today, and I'm struggling to work out when it feeds in. What I will say is that I don't think it's immediate, because as I said, I think that the global impact is when JGBs sell off enough to find a floor, and that's when you get money back home. And I don't think we're close to that level yet. As I said, the election is still, almost 3 weeks away, and therefore we've got a lot of time for this to play out. And I think it's getting its own self-reinforcing dynamic. Who wants to go into this market right now? We're talking about the Bank of Japan having to hike maybe 3 times this year to defend the yen and the JGB market, which is just creating the dynamic even worse. So I think it's delayed for the rest of the world. It's Japan focused right now.
Okay, Bloomberg Markets Live executive editor Mark Cudmore on the potential implications of the significant sell-off that we're seeing, particularly in the long end of the Japanese curve in terms of the sovereign debt there. And you can get a lot more analysis, of course, from Mark and the rest of the team by going to MLive Go. European futures pointing lower by 0.5%. US futures lower by 1.6%. We'll bring you the open. That's coming up. This is Bloomberg.
Tuesday morning, good morning. Couple of minutes to go until European equities start trading, cash European equities start trading. Look at all that snow. Look at that. Davos looks amazing this morning. It is going to be the centre of attention, I suspect, over the next few days. But it's having to compete with other places as well. Tokyo is one of those, certainly at the centre of the debate this morning on what happens next. We've got a big move in JGBs, huge move in JGBs. What are the implications of that? We will discuss in a moment. US futures, remember we were closed yesterday. It was MLK Day over in the United States. We're playing a little bit of catch-up when it comes to this story. We're down by 1.36% on US futures. There's a whole range of risk factors to price in this morning, from what is happening around Greenland to the story in Japan to the Trump tariff story coming out of the Supreme Court potentially a little bit later on. Earnings, we've still got plenty of those to talk about as well. It is a packed risk session. Tom, European futures?
Yeah, Monday was all about, of course, the trade story, the tariff impact potentially on the likes of the automakers and luxury goods, and you saw losses across the benchmark of 1.2%. Today, to your point, it's both the trade story, but also geopolitics and Japan as well. European futures looking to build on the losses of yesterday, pointing lower by 0.6%. Here in the UK, FTSE 100 futures pointing lower by 65 points. We watch the miners, of course, on higher gold prices, once again up 1% in the session so far. DAX futures pointing lower by 152 points. Anna, what are you looking at in terms of individual names?
Yeah, let's talk about some individual stocks in focus. LVMH, certainly one of those. Luxury out of Paris, maker of champagne, crucially. And President Trump overnight has been talking about the possibility of putting a 200% tariff on champagne. He suggested that would be a way to make President Macron agree with him on certain things, the Board of Peace being one of them. RyanAir in focus. Elon Musk has been talking about musing about the possibility of buying the airline after a row last week with the CEO. And BHP in focus for various reasons, including a production update from them. Guy.
Okay, here we go. Busy session. Lots to price in, lots to think about. How much can you price in? We're about to find out what European equity markets look like. We've already seen what European bond markets look like. Gilts are about to open as well. FTSE 100 is down by 0.3%. Paris is expected to have a much tougher open this morning. But the mining sector, it'll be an interesting one to watch when it comes to the FTSE 100. There was a bit of M&A action in that market as well yesterday. So we're now down by 0.5%. Europe continues to sell off on the back of all the risk events that we are watching. Which one is the most important at the moment? Very hard to tell. But they're all coming together to produce a negative risk environment. The CAC, there we go, down by 0.7%. We're going to keep a firm eye on what happens with LVMH. The IBEX is down by 0.7%. We're going to wait for a moment to see what the DAX does and what the Swiss market does. Scott Bessent has been talking about the trade deal with Switzerland in his briefing as well this morning. But that's where we are. We had yesterday. The US was closed yesterday. We sold off hard yesterday. It continues today. No dip buying just yet, Tom.
On the sectors then, hello travel and leisure and hello RyanAir, because travel and leisure is up 0.2%. It's the only sector in positive territory so far. On the downside, pressure coming through for finance, currently down 1.2%. The biggest loss coming through there so far, at least. Across the index level, again, just to check in terms of what we're seeing, down 0.7% on the FTSE 100. The CAC over in France, as Guy was mentioning, down 0.8. Checking in on some of the individual names, LVMH then currently down 1.6%. Anna, what is catching your eye?
Well, the big picture is that negativity, as Guy, you were saying, no dip buying today. So yesterday was negative, and we fully anticipated that because of the tensions transatlantically around trade. Well, we're not drawing a line in the sand just yet. We're down for another day on the stock 600, down by 0.6%. That does seem to be an area of focus, and the concern around tariffs expressed perhaps in luxury goods, with LVMH down by 1.5%. The miners are a little mixed today because on the one hand you've got higher precious metal prices, that helps there, but on the other hand copper has been a little weaker and BHP a little weaker as a result of some of that. So that's a sort of mixed bag. But I guess I'm also taken by the RyanAir story, Guy. Yeah. After a spat last week over whether they should or should not attach Elon Musk's Starlink masts to their aircraft.
Apparently
this has escalated.
It would cause too much drag.
Yes.
Michael O'Leary deeply concerned about that.
But Elon Musk disagreed.
Elon Musk takes a very different view and is now should I just buy it? Maybe that would be the way to install Starlink onto RyanAir.
And importantly, he says that a Ryan has to be put in charge of RyanAir. I think that's pretty significant.
Does anybody take this? Is that?
Investors apparently taking this seriously.
The stock is up by 2%. Do I take this seriously?
There you go.
I don't know.
The answer.
Maybe I should. The drug companies are all down pretty hard, actually, and I wonder whether that's a trade story as well. Roche is down, Astra's down pretty hard, so you've got that story in the mix. SAP is now down by 2.2%. It's just opened as well, and so we are seeing some. There's quite a divergence in the technology stock. ASML is up, but the software companies continue to get hit reasonably hard.
Well, that is a theme we can pick up on in our next conversation. We'll get to that. Maria Voigtmacher joins us, Head of Equity Research at State Street Global Markets. Maria, very nice to speak to you. Thank you for coming in person. Nice to have you with us. So we know that you like technology. We talk to you often about technology. We'll get there. We'll get to the nuances, the different types of technology, software versus the rest. But before that, I just want to get your thoughts on the ramp up in trade tension, and no line in the sand being drawn today. European stocks down for a second day. So this does not seem to be a buying opportunity. Does it look like a buying opportunity to you?
I mean, probably not yet. And I think it's important to put it into context of what happened last year. I mean, obviously, lots of trade tension, lots of rhetoric, very explosive rhetoric. And then market managed to kind of compartmentalizes political uncertainty and looks through the lens of economic impact. What does it do to earnings? What does it do to rates? And eventually kind of nerves calm down and we looked through and earnings were strong and rates come down and that was supportive for market. So I think maybe that's on the back of investors' kind of mind a little bit that we've seen this game played before. And So I feel like investors probably will be watching this escalation of trade tensions. Absolutely, really important. Are we there to make strong decision to unwind portfolios? Probably not, because investors came into this year with quite an upbeat outlook and positive and constructive story. So they're watching, I think.
And left a bit vulnerable maybe because of that. Now it's interesting you mentioned last year and how things played out because Scott Bessent was drawing on last year as well. Earlier on, the Treasury Secretary in Davos talking about last year and saying cool heads should prevail as they did last year. But what brought things into line last year? What caused cool heads was movement at the longer end of the Treasury curve, it seemed. And we've got that today, not because of Greenland, maybe because of Japan, but we've got yields going higher. Yields going higher in the States on Treasuries, yield going higher on JGBs. Is this a bit of a threat to equities, this higher yield story? Do you think?
I think you're right to kind of think about Treasury moves were really important last year. What seemed to be very, very important last year was corporate earnings season. So back then, what happened is that expectations obviously collapsed, like trade war, a kind of end of the world order as we used to know. And then companies started reporting. And again, I draw back to my favorite tech sector, so that tech CEO stood up and said, actually, uncertainty is huge, but our profits are very clear, very strong. We're growing, margins are high, and we have very good visibility on what's going to happen in the future. So I think, that's interesting that it's happening kind of right now around earnings season, and companies have an ability to comment on what this kind of geopolitical kind of uncertainty does to their profits and earnings and outlooks. So I think that would be really, really important to watch for investors. Fortunately, we are kind of in the midst of reporting, so we're getting this information, and that will help people to make up their minds.
Maria, your bias for tech. Good morning. Your bias for tech. Is there a risk that you overlook the changes in the earnings growth that we're seeing? So earnings growth is expected to slow for some of the Mag 7 names. Still decent, but it's coming off from previous years. And earnings growth for other parts of the equity market that had been overlooked started to pick up.
So I think that's really the key. And why did we like tech? We like tech as a sector, but fundamentally, what do you want to own in your portfolio right now? You want to own a portfolio companies, sector styles with better earnings outlook. And I think it's still, the divergence is still there. The tech is still the fastest growing. If you look at earnings expectation, tech is what for Q4 in US is 23-24%. S&P X tech is 4 and 5%. So it's still, this gap is there. And you're absolutely right. When we see this real kind of delivery of strong earnings outside tech, that's when you rotate. And yes, that's everybody expects like rally broadening. You do need to see strong earnings broadening. That's really important.
Within the tech basket, do you sell software, given the challenge of Anthropic's co-work, for example? Some of the legacy software names?
Yeah, software is probably one of the weakest spots within software, so also within tech. But as I say, it's not just like tech per se. It's areas with strong earnings. Where do you find strong earnings? They happen to be in this kind of mega cap area. But within that, it's really important to focus on strong profitable tech. So, unprofitable tech is doing quite well recently. So that's an area of concern for us, of course.
How big a risk is there that the Mag 7 underperformed the S&P this year?
It's always a risk. Positions are high. I keep stressing that when you're uncertain, you have to, where do you hide from?
The market's not doing it, though. The market's the Russell's up 7%, the Nasdaq's up 1%.
Yeah, no, I hear you. And it's very common to see that sort of behavior at the start of the year when you come in new, what's cheap? Let's buy something cheap. Let's buy small caps. Let's buy mid cap. Let's buy value.
But the US economy is re-accelerating. That's the reason for the trade.
Well, let's see. Earnings season is coming. So I think it's kind of show me the money moment. You need to see those companies really delivering. So far, we haven't.
What happens if yields go higher? These are long-duration assets. Don't they get hammered on that?
We were worried about that for tech a couple of years ago when yields got higher. And then we discovered those tech companies have so much cash and they are kind of a lot less sensitive to higher interest rates than small caps, who are very much depending on cheap financing.
How confident are you can spot the turn? Because the market is already... The market's getting nervous about tech, okay? That is, I'm seeing article after article, note after note. How confident are you about spotting that turn? And if you don't get it right, how ugly could it be?
Yeah, I think that's a really good point. And we saw that last year. Last year, people were very worried about tech, and we've seen bouts of selling of tech. And what we saw in State Street custodial database, people sell out of tech. That's easy. The question is, what do you buy? And what do you buy? You need strong earnings. And then people invariably gone back to tech. So that was the thing, that until you find a good place to kind of park your money, and clearly that's not gold and miners because they're equally as expensive and you can make the same concern. So unless you find economy really reaccelerates and you go and buy your industrials materials, or it really collapses and you go and buy your defensive, if you kind of bubble along and you kind of soft landing economy, right, that people thought was possible, then you stay with tech. But on your point, how ugly can it get? Absolutely, positions are very, very elevated. So you see kind of a big kind of step down. But also, I would say, when people really begin to rotate, it took investors years to build up those positions. So, okay, it's going to be sharp fall, but it will be prolonged fall. So I think you probably can get on this trade.
Sharp and prolonged.
Yes.
Wow, okay. Maria, where does that leave European tech? I was interested yesterday that the conversation, the concern was very much about tariffs, and there is some read across into tech there, but even where there isn't, this was just a sector that had done okay, so it was being sold off. Where are you investing across the European technology space?
Yeah, I think people often talk, okay, we want to diversify from US. US so crowded, let's buy Europe, let's buy emerging market. But then when you look within that, what do they buy? Yes, they buy better earning stories, right? And if they find that in European tech, great. If they buy it in Korean tech, great. So, but it's still the same trade. So it's not really diversification. So, I keep stressing, it's earnings, it's large cap, it's strong balance sheets, that's what you buy. Yes, in your European tech is that, so that's fine, you buy that. But it's really earnings story. It's not like, okay, I'm tech evangelist. It's better earnings. That's the stress.
I'm getting a theme of earnings coming out of this conversation.
That starts soon, doesn't it?
Yes.
Feels like we're just on the verge.
Yes, absolutely. I think Netflix is tonight. Yep.
I love that Maria says she's not a tech evangelist.
Really? It's just felt that way for a very long time.
2 years.
No better alternatives. Not an evangelist, just no better alternatives.
Absolutely.
That's the right way of putting it, Maria. Nice to see you. Thanks very much indeed for stopping by to see us. Maria Feitmana, Head of Equity Research at State Street Global Markets. Core 6 looks a little like this morning. There is a lot of activity in the luxury space. It is under pressure. I could argue maybe you would have seen more. A 200% tariff on champagne. LVMH is down by 1.5. It was under a little bit of pressure yesterday. Defence stocks are coming off. Tech, there you go. ASML, one of the few standout stories at the upper end of the markets this morning. Let's find out what else we're watching with Jennifer Creary.
That's right. We're keeping an eye on some of those French drinks makers. LVMH, Pernod Ricard, Rémy Cointreau, all down in the red this morning. That's after US President Donald Trump floated a 200% tariff on French champagne and wine makers. That's in retaliation to French President Emmanuel Macron's refusal to join his Board of Peace. Macron raising concerns over respect for the United Nations principles and framework, those weighing heavy on drinks shares this morning. We've also got Renault up in the green, up more than 3% this morning. That's after the company announced that it's contributing to the development of the French drone industry. Of course, investors on the lookout for stocks that are poised to benefit from additional military spend from European countries. Those shares positive on the open. Next up, we're taking a look at BHP as well. Down in the red this morning, down almost 2%. That's following on from a drop of 2% in Australia as well. That's after the world's largest miner raised its projected investment in its potash project in Canada to $8.4 billion. That's up more than $1 billion above the upper range of its previous guidance, weighing on the shares this morning. And finally, we've got Wise as well. The company reaffirming its underlying income forecast for the full year. It's also seeing its margin at the high end of its stated range. Those shares soaring on the open, more than 10% off the back of that news.
OK, Jennifer Curry on some of the stocks that are on the move this Tuesday. Jennifer, thank you. Coming up, we are joined by Lila Ibrahim, COO at Google DeepMind. Expect top lines on all things tech and AI. We're just talking about the AI trade, of course. So more insights from someone near the top, of course, of the chain when it comes to DeepMind. That's coming up. This is Bloomberg.
Welcome back to the opening trade. 8:16 here in London. Equity markets 16 minutes into their session and stocks are weaker for another day. Let's check out what's happening in the bond markets, though, because there's a lot of news flow being generated there, or a lot of movement generated there because of the news flow coming out of Japan over recent days. Election is called, fiscal worries to the fore, and so we see Japanese bond yield up by 26 basis points at the 30-year tenor, and for the US markets, for Treasuries, up by 8 basis points at the same time horizon, Guy. So once again, worrying about the long end of bond markets.
Gilts market moving at the long end. There's a huge move in the bond market and it's rippling into other asset classes. Geopolitics a big feature of the landscape as well. Hard to kind of separate that out. Plus, you've also got to throw in what is happening around AI. That AI story, certainly a big part of the Davos agenda as well. Let's get a little bit more on what is happening on that front. Let's hand things back to Francine Lacroix at the World Economic Forum.
Anna, Guy, thank you so much. I'm delighted to be joined by Lila Ibrahim, CEO at Google DeepMind. Lila, as always, thank you so much for joining us. Look, it's very clear that President Trump has stolen the limelight. Everyone is talking about trade and tariffs and what's happening with Greenland. This was also meant to be the tech show. We have all the biggest tech companies here. Like, how, what will you focus on this week to try and get the most out of Davos?
Yeah, well, these are certainly interesting times. And, as a global organization, we really need an opportunity like Davos to be able to have many different conversations. We operate in continents around the world, and we try to focus on what we can really control, which is how do we make sure that AI is being developed responsibly and to benefit humanity. So we're really focused on a lot of those conversations this week.
Lila, what is DeepMind now? Is it still a research lab or is it more a product company?
Well, DeepMind was founded originally about 16 years ago as an AI research lab, and it continues to operate as such. But we've also been able to bring in becoming the AI innovation engine room for Google. So everything from Gemini and our latest models like Nano Banana, all the way to some of our scientific breakthroughs and our work in terms of what might the next breakthroughs in AI be, such as what's the next transformer technology. So we have quite a broad portfolio.
How much are you working on enterprise? I know Code is a big hit with developers. When will Google's versions, anti-gravity, come out?
Yeah, well, we've been really focused on continuing to make Gemini a really powerful model, bringing in capabilities that we think can unlock human potential. And Code was one of the areas that we really focused on in the past year and really pleased with the progress we've seen with Gemini 3, which was announced at the end of last year.
So what's next for Gemini? Are you hiring more people to work on it?
And we're always looking at our talent. And so on Gemini specifically, we're continuing to think about what are the capabilities that will continue to increase the making it valuable for users. So things like, how do we continue to make it more factual? How do we help with things like reasoning, concepts, memory? We really believe that we can have a personal assistant, but in order to do so, there are a lot of areas that we need to work on, such as privacy, as well as how do you make sure that you have memory. So the AI understands me and my preferences and my needs and can actually, I can use it as a tool as part of my everyday work. And that what that requires is really understanding more of kind of the world model, the context around us in our daily lives.
Lila, is there anything that you've put on the back burner because of your big focus on Gemini?
Well, an organization like DeepMind, I think one of the extraordinary things is that we have been able to keep the breadth of portfolio. So when you look at last year, not only did we have Gemini and VO, progress in our video generation, audio, imagery, but also things like Weather Next 2, being able to predict weather forecasts, like 50 different paths of a hurricane for the next 15 days, which really, if you think about it, can really help with emergency preparedness. We've also made significant progress in some of our materials discovery to help with superconductors, to power supercomputers, or next generation batteries to help with electric vehicles. We've continued to advance work in Synth ID, our watermarking technology, ancient text to help us understand the past. I think there's so much exciting work that's happening, and that's actually what makes this such an extraordinary place to work. Is I've never been in a place that the human, we're only limited by the ideas that we have. What are the biggest world problems that we might be able to address with AI?
It's going so fast. What are some of the ethical questions? I mean, you touched on privacy. There's a couple of other things that I know you think about, but how should we be looking at it? Because this is also a race. I mean, this is probably the biggest geopolitical race, even with other countries, including China. And so I wonder whether when you build it so fast, there's things that could break.
Yeah, well, we're always thinking about responsibility, safety, security from the very start. In fact, when we embark in our research projects and start to define them, we're also thinking about what are the risks, how might we mitigate them, if we don't have the expertise around the table, who are the partners that we need to partner with, but then also what are the opportunities and how do we make sure that we're not solely focused on the risks, that we miss the opportunities and invest in those. One of the things that I've been really excited about in the past year is some of the progress we've made around making Gemini better for learning and education. How do we make it more efficient, more effective, more engaging so that learners, regardless of where they are in their life journey, the technology can meet them where they're at. And that, of course, also brings up a lot of questions and concerns that we have about, what is the relationship that humans have with their AI? How do we think about mental well-being? These are all areas of research and investment that we're making up front so that we can develop both the innovation as well as mitigate the risks and do so responsibly.
What are business asking you? So I'm sure you're meeting with a lot of big chief executives here, and a lot of them are excited. They're investing quite a lot or buying some of your models. But what do they need for their staff?
Yeah, well, one of the questions I got last night at dinner was about this, are we prototyping too much? Is there too much piloting going on? And my response was no, we're still early in AI's development. It can feel like we're far further along on the technology curve than you might expect, but there's still so much work to be done to make the models even better and more valuable for users. And as a result, we're never going to have as much time as we do right now to explore and really understand how do we want to shape the technology? Where and how do we want to set the boundaries? One of the things I've done with my own team is to say we need to be experimenting with using AI as part of our workflow. Right. And at the same time, what are the very human elements that we're bringing into the job that we should actually celebrate, retain, invest in? And I think it's really this kind of co-development of AI in the workplace, also recognizing the human value, and that's how we're going to shape how AI will reshape our jobs.
Lila, what is your biggest concern regarding, away from ethical questions, is it actually access to power? So is it trying to figure out the energy complex? Or is it just making sure that, rivals like Meta don't poach your staff? It seems like it's a massive global talent war, like maybe the banks were facing 10 years ago.
Yeah, well, actually, on the talent side, all we tend to focus on is how do we make sure that we hire really good talent that are very values aligned with the work that we do. And because our mission is to build AI responsibly to benefit humanity, that shows up in the people that we hire and the culture that we build. And so from a talent perspective, I feel like we know what we want to do there. The ethical questions, I think it's not just about the ethics questions, it's also about misuse. So we think a lot about how do we make sure that the benefits are significantly outweighing the risks and the potential harms. So we think a lot about the governance, how do we make sure that this is regulated well, how do we operate responsibly in the countries where we are. I have to say that really what keeps me up at night is the risks. Are we doing everything we can to mitigate them? Are we thinking enough around the corner? Yeah. Because if you're not investing in that early, you can't be a bolt-on, right? It needs to be very early on. And then also, are we investing in the opportunities? We believe AI could be one of the most transformational technologies of our time, and we're already seeing how it's empowering creatives, how it's improving education and learning, how it's unlocking productivity and advancing scientific breakthrough. We're seeing real-world impact right now. And so I also worry a lot about, like, are we really maximizing the benefits to provide as much as we can for the world?
Lila, thank you so much. Lila Ibrahim there, Google DeepMind COO. Back to you in London. We'll have plenty more and throughout the day here from Davos.
Francine, thank you. Back with Francine and the team as we go through the programme. Tom, we've got a focus on, I said champagne earlier, it's actually wine and champagne that President Trump has threatened to put a 200% tariff on. And so we'll continue to keep an eye on what's going on with LVMH and Pernod, because this is just wider than just the champagne sector. But those stocks certainly in focus, although Pernod Ricard going higher this morning.
I think our favourite stock of the day is, or at least our favourite stock story of the day, is potentially RyanAir and the spat between Michael O'Leary and Musk, of course.
Because it's easy to not take seriously, isn't it? But then you remember what happened with the purchase of Twitter. Nobody took that very seriously to start with, did they? And then here we are.
Suddenly it happened.
Yeah, OK. I struggle to see how this goes much further, but I guess you've just got to price it in and
attach a low probability.
Attach a low probability and see what happens. But it seems to be moving the stock. The story is the bond market, though, this morning. Epic moves we're seeing out of Japan, rippling into other bond markets around.
And
the
maybe
world.
Another reason why European stock markets failed to bounce this morning. Another reason to be concerned.
Yeah, the sell-off is there, and it's rippling across, arguably, to the equity space as well, to your point. Coming up, more on the tech theme, though, as we head back to Davos to talk all things technology investment and AI with Fabrizio Blasi, who is the CEO of Naspers and Prosus. That is next. This is Bloomberg. This is the opening trade. We are 30 minutes into today's session, so the selling pressure continues across the European equity space after losses of 1.2% yesterday. Further downside today, down 0.7%. The luxury names under pressure again on the tariff threat, but there's a sell-off in the global bond markets as well, particularly at the long end, and we'll get the details on that shortly. That is rippling across the equity markets as well. Arguably, it's not just trade and tariffs and Greenland. It's also what's happening in terms of the ripple effects of Japan and the sell-off there. So we'll start with the Japanese 30-year, where yields are up 26 basis points. That's where the pressure is. The 10s are selling off as well. And you're seeing that then read across in terms of US Treasuries, the 30-year at 492. When do we get to 5% on the 30-year? Closing in on that with moves of basis points, 8 basis points higher on the 30-year. Here in the UK, the 30-year is also high. Yields up 6 basis points, 522 now on the long end of the UK gilt markets. We're seeing the effects already, Guy, in terms of the concerns domestically in Japan about the fiscal spend and cuts around consumer goods and the global effects of that.
It's going to be interesting to see how it plays out over the next few days. OK, let's talk about the internals and what is happening in this market. They've got a 5-to-1 ratio, basically, in terms of losers versus winners. Only 97 stocks up in the stock 600. You've got relatively light volume, which I think is interesting. Maybe we need the US to reopen to get a volume picture coming through. Let's talk about stocks that are higher today. Wise, the transaction company, up today on an update, Q3 update. It's also talking about a US listing. That stock is up by nearly 13%. I'm averaging, pushing it up a little higher. RyanAir's up by 1%. I think we're fading the idea that maybe Elon Musk could buy RyanAir. ASML, though, now moving into negative territory, so some of the tech kind of heavyweights that initially lifted the market beginning to fade, which is interesting as well too. So even the leaders now seeing some red on that board. Let's talk about where we are. Certainly seeing some losses. The pharmaceutical space is down. Astra's down. Roche is tracking a little bit lower. Keep an eye as well. The Supreme Court potentially ruling on tariffs a little bit later on. That's a factor in that sector. But the tariff story certainly writ large when it comes to luxury. LVMH, big maker of champagne and wine, down by 1.75% on that tariff threat, Anna.
Let's talk about some of the other news flow, and we'll start with what's been driving bond markets. The slump in Japanese bonds deepened earlier today, sending yields to records as investors gave a thumbs down to Prime Minister Sanae Takaichi's election pitch to cut taxes on food. The Japanese 40-year rate topped 4%, the highest level since its debut in 2007. The yield on 30-year JGBs climbed by more than 25 basis points. Donald Trump has threatened to impose a 200% tariff on wine and champagne from France. This after the French President Emmanuel Macron declined an invitation to join the US President's proposed board of peace for Gaza. Sources say that President Trump wants the full constitution and remit of the committee signed in Davos on Thursday. Meanwhile, Donald Trump has renewed his push for the United States to take over Greenland, claiming the European Union won't resist much. Speaking about the Arctic territory late yesterday evening, the US president said, quote, "We have to have it." He added that he will meet with several parties in Davos over his ambitions for the country. Tom.
OK, well, let's get back to what's happening in terms of the conversations in Davos. But before we do that, European stocks, of course, outperforming the US so far this year. The dynamics, of course, have changed in the last 48 hours or so, with tech names in the driving seat. Is that momentum now at risk from those rising trade tensions? That is a topic of conversation on the ground at the World Economic Forum. Let's bring back in Bloomberg's Francine Lacott, who is there with a guest who has an insider view on the sector. Fran.
Yeah, an insider view, because joining us now is Fabrizio Blasi. Tom, thank you. He's the chief executive of Prosus and Naspers Group. Fabrizio, as always, thank you so much for joining us. Look, you've been on the acquisitive trail. I mean, you've done a couple of things that were quite big. You've gone after large assets in Europe, including Just Eat. What happens next? Do you have appetite for more?
Francine, pleasure to be here. It's always a pleasure to be here with you. Yeah, very excited. Just getting started. We did like $8 billion in acquisitions last year, what included Despegar in Latin America. Then Just Eat Takeaway in Netherlands, and then we did La Centrale in France. So it's a good start, but I think we have everything ahead of us. For sure, we are willing.
More to come?
More to come.
More to come?
I'm sure.
How much money do you have to spend?
We have more, at least $10 billion more to keep investing. And I see so many opportunities. The world is changing a lot. Actually, I think we are starting realize now we are in a new world order. In this new world order, everything changes, and there will be much more growth in AI technology outside US. Over the last 2-3 years, all the wealth creation in technology was in US. What we believe is that after this decoupling that is happening right now, we will see much more growth all around. So we are investing a lot in India. We did 5 IPOs in India this year. We are ready to do more acquisition investments and IPOs in India. I think India is growing a lot, more than 7%. It's the 4th biggest economy. We did a few acquisitions in Latin America. Now we have a very big group of tech there, and I think we can do much more. I think Latin America has a space to have $100 billion business there. And Europe is my passion. I committed to Europe. We did Just Eat Takeaway in La Centrale, like $6 billion in investments. And I think we can do much more. Hope we can move much faster. That's my...
Okay, faster because you're frustrated with regulation in Europe. You were telling me that. But what do you want to go after? What will you do, for example, with your stake in Delivery Hero?
Yeah. When we did the Just Eat acquisition, the commitment we had to do is to have to divest $3 billion before we can do more acquisitions. I think this is a big mistake for Europe. I think Europe should be talking about how we invest more and faster. But actually, we are talking about how I divest faster. I think this is absurd. I think the competition authorities in Europe said no to the Siemens-Alstom deal 5 years ago to create a big transportation global business. We don't consolidate banks. We don't consolidate telecommunication. We are not consolidating or have a bigger group in food delivery. I think this is a mistake. I think this is... We are behaving as if we were in 1996. We are in 2026, and the world now requires big tech in Europe. So I am legally obliged now to divest the Delivery Hero. What a big mistake. I'm sure because the world changed that Europe is going to keep changing. And understanding that, we have to build big tech here.
Fabrizio, it's very clear that the Trump administration is here. They're taking aim at Europe because of their treatment with tech and big tech, and because they say on the geopolitical front they're too weak to actually defend something like Greenland. Like, do you agree fundamentally with Trump that the European economy is broken?
I see Trump saying, I'm here to defend the interests of the American companies and fighting for that. Fighting for that aggressively, let's say it this way. I see other countries also fighting for their companies. And I think the difficult decision that Europe has to do, and they have to do trade-offs that they are not doing today, is to say, we need to have big tech in Europe. Otherwise, the big tech is going to be in China and US. And I don't think these big decisions are being done yet. For example, as I told you, we really need to consolidate and have bigger technology companies here. I don't think it's happening.
But it doesn't deter you from looking at other assets. So is there a particular sector that you want to be more involved in Europe?
I think that the disruption happening right now is on AI, obviously, and assistants. Over the last 1 to 2 years, we have assistants that answer all the problems you have. But what we really bet now is in assistants that do things, assistants that deliver real work, real things, assistants that you can ask something to them and they can make your life easier. And we are a very big player on that. Outside of China and US, we are by far the biggest player. So we do food delivery all around the world with hundreds of millions of customers. We do travel, mobility, events, grocery, pharmacy. So I think the big thing for us is to connect the AI world to 1 billion customers where they can just ask and have their problems solved. So I think a few years ago, people talk about super app, like an app that do everything. I think the direction now is a system that connects the real world to the artificial intelligence world. And I can't think of a better company to do that outside US than Prosus.
Okay, so what are you looking to buy? And actually, if everything goes to plan, and that's a big if, what does your company look like in 2028?
We are going to keep expanding in the position that we have today of marketplace that deliver, as I said, many real-world services and also e-commerce and payment to really take all the friction, and people, as I told you, can just ask your virtual assistant and have all those services delivered. So we are looking obviously for food delivery consolidation. We are looking for all the adjacencies, so we can really make our customer life easier.
Does this super app or the super assistant, does it have to be European made because of friction with the US and US tech companies?
I think, as I told you, it's a new world organization. You have to do that on Europe. You have to do that in India. You have to do that in Latin America. You have to have local technology that enable those countries to have sovereignty in this kind of services. And that's the Prosus approach. So we have today a big lab of AI in Europe called Prosus AI Lab. In Netherlands, we also launched the AI House in Netherlands, and we are expanding that in Europe and also in India and Latin America.
What happens to your Tencent stake? Do you wind that down?
We are a big shareholder of Tencent. We are a big believer of Tencent. We sold a little more of Tencent lately, but I want to reinforce, I think Tencent is the biggest company in China. It's an amazing company. And during the artificial world...
Will you sell a bit more?
I just announced a few weeks ago that we changed substantially our buyback. So now we are doing a few buyback with Tencent. But right now, our buyback is financed more of non-Tencent assets than Tencent. And I think this is very good for Prosus. I think Tencent has an amazing future. And remember, in artificial intelligence world, having WeChat, it's an amazing asset. I think what Tencent can do is just getting started. So we are selling much less of Tencent, and we are keeping our buyback. We even increased the buyback, selling other assets with less future than Tencent.
Fabrizio, thank you so much, as always, for joining us. That's Fabrizio Blasi, the CEO of Prosus and Naspers Group. But back to you in London, Guy. We'll have plenty more, of course, from Davos throughout the day.
Looking forward to all of that. The message, a simple one there. Europe, get your act together. You can't be thinking that this is 10 years ago, 2026 is a different ballpark. Plenty more great guests coming out, as Fran says, from the World Economic Forum in Davos today. The Finnish President, Alexander Stubb, is going to be joining us a little bit later. The CEOs of both Merck and Novartis on deck as well, as will be the Bank of France governor. What does he make of what we are seeing in the markets today? Big moves in bond markets. And, of course, UBS. His CEO, Sergio Mossi, will be joining Bloomberg. Looking forward to that conversation.
Okay, so those are some of the conversations coming up. There is a conversation happening right now in Davos at the Congress Centre. Bloomberg's head of economics and government, Stephanie Flanders, as you can see, is speaking with Uber's CEO, Dara Khosrowshahi. Let's take a listen.
Revenue-based. And one of the advantages that Uber has is that we know today how much essentially a human driver can bring in terms of revenue. We take about a 20% cut, et cetera, of that revenue. So 80% goes to the human driver. We can sign up for a revenue model that has a high degree of certainty. And as a result, today we're working with very large financial institutions to essentially prove out the financing model for these fleets. We will take balance sheet risk to begin with. But as we prove out this revenue model, then we see significant capital players who are very, very interested in coming into this market. It's a non-correlated asset, so to speak. It will be a very, very large market. And essentially, just like you see these REITs, real estate investment trusts, that own hotels, that own shopping malls, et cetera, trading in the public markets, we think you'll see kind of these fleet entities as well. Public and private insurance companies owning fleets in different cities, and we will be a very big part of that.
You think, but in terms of proving the case for that, will be entirely revenue-based, and you'll have the yardstick of Uber currently?
Exactly.
Okay. When you're working, I think you've mentioned in the past that as you have trouble sometimes on the hardware front, and I just wondered, are you finding it difficult? What are the challenges of trying to get car manufacturers to work with you in some of these areas?
Yeah, I think the car manufacturers are finally seeing this market as a very, very large potential market. So the issue isn't having trouble on the hardware, it's bringing the cost of hardware down. And I think we're probably 2 generations away. Right now, you can build a hardware, but every build is bespoke.
2 car generations.
Yeah, but 2 car generations. So it's the next generation of cars. You won't have bespoke builds. The cost of sensors is coming down very significantly. Cost of compute is coming down. NVIDIA is building a reference architecture that we think is very, very good for the industry generally. But it'll take 2 generations of hardware to get to pricing well below $100,000, which truly makes this a mass market product and something that we're very, very much looking forward to.
Are there particular manufacturers who are closer to that than others?
Every car company is talking about it. I wouldn't say anyone is in the lead. This market is a market that's ready to be taken by OEMs that take a bet on it.
When you look at, as I'm sure you do, some of the assumptions built into investors' models, the ones who are most bullish about this, which seems to be all the people who are buying, how stretching, I mean, I wouldn't expect you to say, oh, it's all overvalued, but how much, in your view, are they conservative or are they highly optimistic in terms of how long it's going to take to make revenue from some of these things?
The market for AV investment, it's mostly private companies, and Waymo is the leader there, but there are a number of Chinese companies out there. And I don't think actually that market is particularly overheated. I think that the potential is trillions of dollars in incremental spend, transportation spend. I think, again, every single new vehicle sold 10 years from now is going to be L3 or L4 ready. So I think the market is enormous. And I don't think the market is overheated by any means. Now, the overall AI market, in terms of foundation models, hardware providers, Okay,
the CEO of Uber speaking to Bloomberg, Stephanie Flanders there, about the evolution of autonomous vehicles, the hardware piece, and how AI is going to play a role as well. Let's get back to the markets briefly because, of course, you continue to see the sell-off in the sovereign debt markets, particularly at the 30-year level when you look at US Treasuries and gilts as well. The European stock market, further losses there, accelerating the losses, down 0.9%. So, given the losses of yesterday, it's pretty sharp in terms of the downside that we're seeing. The FTSE 100 also off by a full 1%. S&P E-minis looking to reopen, of course, after the holiday yesterday, pointing lower by 1.6%. Nasdaq 100 futures down by 475 points, and the Russell 2000 has so far outperformed year to date, pointing lower by 1.8%. Plenty more coming up. Stay with us. This is Bloomberg.
Welcome back. This is the opening trade, 8:50 here in London, and European equity markets, well, we're not buying the dip just yet. Yesterday was negative for European stocks on the back of trade tensions. Today appears to be the same in the sense of the direction, not necessarily the magnitude. US futures, of course, pointing lower because they are looking to catch up. Tom, we are going to be thinking about trade, perhaps, as we go through the day. What else is on the radar?
Yeah, ECOFIN meeting will be happening in Brussels, so we'll listen out, of course, for any sound, any further responses to the continuing pressure and threats over Greenland coming from the Trump administration at 9:25 a.m. UK time. Talking of the Trump administration, not directly part of the administration, of course, but the US House Speaker Mike Johnson of the Republican Party will be addressing the UK Parliament, which is interesting, of course, on the 250th anniversary of the United States. And the UK deadline to approve that Chinese embassy, that's also today as well. Expect that reporting suggesting that that's going to happen, and Prime Minister Keir Starmer could be visiting Beijing later this month. We're also going to get those Supreme Court hearings we'll be discussing as well. So potentially an opening today for the ruling on IEEPA tariffs. On Wednesday, it's the Supreme Court starting to look at the Lisa Cook case, which arguably could be more important for the markets, or equally as important as well. And we're also getting earnings from the likes of Netflix.
It's huge. The risks, there are so many risks out there. Supreme Court, that's going to be massive. What happens around Greenland? What's happening with the Japanese bond market? Chagos, let's throw the kind of the UK angle. There's so much for these markets to deal with this morning. I don't know how you price it. What I'm stunned about is that risk isn't higher. The VIX is at 20. Woohoo. We're up a little bit, but we're definitely not elevated at the moment. Let's talk to Mike Masika about this, Senior EMEA Equity Strategist at Scully Montgomery Koenig for our M Live team. Good morning to both of you. Welcome back. Mike, let me start with you. Is this a market that is ready for a sell-off?
Well, Guy, it's a market that's definitely ready for profit-taking, and a little bit more than what we've seen. The reason is, very, very few investors have protection right now. Everyone is long. The Bank of America Fund Manager Survey just came out this morning. It's the most bullish in 5 years. 48% of investors don't have any protection whatsoever. That's the most in 8 years. Bull and bear ratio is at hyperbull level.
So we're all in, basically.
I mean, everything is all in. Cash levels are record low, 3.2% of portfolios. Never happened before. So again, you get a little bit of friction, a little bit of tension, and you get profit taking. You have to have that.
Mike, how much of what we're seeing in the markets today is down to higher yields and the selling of sovereign debt versus trade tensions?
Most from what we've seen, most of the issue is the trade tension, and actually it comes back to that survey. The number one reason for potential sell-off, according to a very large number of investors, is now geopolitical tensions. This was nowhere to be seen in the past 3 months. In the survey, and now it's number one tail risk for the markets. Way above.
How do you price it though?
It's interesting. The market tried to look through Venezuela, look through Iran, its most recent iteration at least. Skylar, we are seeing markets reflecting on some geopolitical. Well, no, it isn't geopolitical tension that's pushing up long end yields, is it? It's fiscal concerns about Japan, which could be linked, but that's where we are right now. What do you make of the moves at the long end of the curve and how global that conversation goes?
Yeah, absolutely. I think particularly in Japan, the worry is very reasonable in that debt to GDP is the highest in G10. You have fiscal just rising from here, so that debt to GDP ratio is getting worse. You also have this duration mismatch where you've been able to fiscally expand because you've bought lots of risky assets abroad. And so as your yield rises or as your interest rate rises, that becomes more concerning from a fiscal, area issue. And then I think, too, you need to think about term premium generally in the 2010s was just structurally too low. So we're just transitioning to that higher environment. And there should be ricochets into other markets because it's not just Japan that has fiscal worries right now. And the correlation between Japan and European bonds actually is the highest in the last year than it has been relative to the past 10 years.
Are we going to get repatriation? I think that's what everybody's trying to work out. You talk about it kind of moving into other markets. Japan's been the kind of the piggy bank of the world. It's provided huge amounts of liquidity. If that sort of turns on its tail, what are the implications?
Yeah, that's a massive risk in terms of a huge amount of U.S. assets are owned by Japanese investors. So whether or not that rotates away is a big question. And it's also coming up in the discussion around, is that going to be a political weapon from a geopolitical perspective? As in, are you going to sell U.S. assets as a result? I think the question more relies on how profitable are U.S. companies, how high is the yield? Because if that stays high, then those assets, there's not a reason to sell those assets.
but we're potentially getting closer to that point.
Yeah, it's just another factor, isn't it?
Yes.
Mark Cudmore was talking about Japanese JGBs need to find a floor, and then we might see that play out. I suppose that gives you more of a sense of what you're dealing with.
But you've also got this whole threat about, are we selling America? Is that trade back on? Does geopolitics make you want to sell America? Does the turbulence in America make you want to sell America? Bessent was trying to play that down.
Do you take that seriously, Michael, the idea that rather the public institutions that own US assets could be leaned on in the worst case scenario to sell US assets?
So you should take European firm or European institution holding US assets. The problem is most of them are private. I mean, you would need governments to actually impose to them to sell US assets. I don't think that's happening, honestly. That would be unseen. Now, do governments could sell US assets? Yes, they could. Central banks, they could. I'm not sure what would be the impact. We can see already today the dollar is being like the number one victim of what's going on, right? It's the one that's going down.
Yes, and in fact, that's possibly one of the things we've not mentioned enough today. You know, the dollar index down by 9 cents of 1%, Bloomberg dollar index down by 3 cents of 1%. Does that sustain, Skylar, briefly?
I don't know. I mean, I'm quite puzzled by the fact that it is happening because it seemed like we'd moved away from that trade. As in, we know that tariffs are worse for European growth than U.S. growth. We know that investors are still buying U.S. assets. We know that hedge ratios have now adjusted. So why have that relationship changed?
A question for the rest of the week. Skylar, thank you very much. Skylar Montgomery-Koenig from our Markets Live team. Michael Masika, our senior EMEA equities strategist. Keeping our focus on Davos today, of course, the UK Chancellor Rachel Reeves will be speaking to Bloomberg 2:30 p.m. UK time. That is it for the opening trade. The Pulse is up next.